Good evening, good evening, good evening, everybody. How y'all doing? How y'all doing? Hopefully everybody doing good on this lovely Tuesday evening. Tuesday evening. Shout out to everybody that's, you know, got loved ones that have passed on or no longer with us or however you choose to remember your loved ones. Today, me father would have been 80 years old today. He would have been 80 years old today, March 13th, 1945, I think. Yeah, he would have been 80 years old today. So, shout out to everybody that's reminiscing about their loved ones that's no longer here. And with that, let's put out the introduction. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spider if you don't hablo Espanol. And you are now in tune to another episode of the Intraday Price Action Recap. Hit him. What's going on, man? Who we got up in here? Shout out. Hold up. I know that name. That Blue 14, I know that name. It looked familiar, but shout out Lump. That Blue 14, it looked familiar. I'm trying to think of who that is. Y'all be having too many names. Is that Calio? What'd you say, Lump?
Can you hear me today?
Yeah, I hear you. You sound like you crossed the street though. Sound like you taking the poopies. Yeah, sound like you taking the poopies.
Can you hear me? I don't know what's up. Okay.
Yeah, I hear you. Yeah, you just sound like you're in a big room. Thomas, that's who that is. Thomas is that Blue 14. Yeah, I mean, I hear you, but you just sound like you far away. Sound like you on a speakerphone. Sound like you on a speakerphone. That's Thomas with that Blue 14. Okay. What's going on, Thomas? What's going on here to learn and share? What's happening, Deborah? Shout out Sherwin, man. Sherwin is the MVP, man. Sherwin be pulling up to every live, pulling up with the hard-hitting answers, man. Shout out Sherwin for being the MVP of the gang. What's going on, Kim? What's going on, Hines? What's happening, honey? What's going on, honey? We got Rhonda Green up in here. Appreciate that. Here to learn and share. Empire Tradings. You been watching the videos, Empire Traders? Empire Traders. What's up, Marco? I posted something yesterday inside the community channel, right? I put it public, and I also shared it with the Discord. But I want to go back and revisit this because when I was updating my charts last night, I was like, man, today I was tweaking, right? It wasn't no chance of an immediate rebalance, right? I was like, I was tweaking, right? So what are we talking about? I shared this with the Discordia, and I shared it with YouTube on the community channel, right? Or whatever you call it, the community page, like wherever the post be. It's public, so you don't even have to be a channel member to see it. Like over here, posts right there under posts. At least I thought I did. Yeah, I did right here, right there, 21 hours ago. This is what I shared right here, right? Says I was just sitting here, turn on my fancy dancy. It says, I was just sitting here updating my charts and notice There was never an immediate rebalance in the works. The signatures of an immediate rebalance are, right, an expansion candle. I typed this up last night. An expansion candle closing with the possibility of creating a fair value gap that supports order flow. The next candle trading back into the range of the candle directly to the left of the expansion candle, right, in step one. The third candle, right, fourth, the third candle, fourth at the least, leaves the range aggressively, right? Sorry for any confusion. So here's what we was looking at yesterday, right? This is not a chance for an immediate rebalance. This is just repricing into that fair value gap, right? And when I was updating my charts, I'm like, man, we was talking about immediate rebalance. Where is it? Right? And I'm just looking, and then I remembered this was the wick we was talking about the whole time. This is just repricing that fair value gap. That's not an immediate rebalance, right? This, on the other hand, is an immediate rebalance. You see, we got the expansion candle right here, number 2. So we got candle 1. Candle 2 is the expansion candle. Right, candle 3 trades down into the range of candle 1 to the immediate left of that expansion candle. And then the next candle, right, this one at the latest over here, right, I said the 4th, but that really would be the 5th candle. So the next candle, this one at the latest, leaves there aggressively and, goes to engage with that buy side in this case right here. This is an immediate rebalance. It had the possibility of creating a BISI this big from that close to that high, right? That supports the order flow at this time, but the candle traded down, did not create it, and then got up out of there and went and engaged the sell side, buy side. That's an immediate rebalance. This right here is just repricing that fair value gap. Even if it continued down and took out this liquidity, that's not an immediate rebalance. When we was talking about that being a possible immediate rebalance, I don't know what I was tweaking on. I was tweaking, right? And I want to come out there and put it out there because I'm sharing my understanding of these concepts and I don't want to share anything wrong, right? I was tweaking here. A whole lot of furus ain't gonna tell you they was tweaking or they made a mistake or they misspoke or they just gonna pretend like they ain't never said it. That ain't no immediate rebalance. This is. All right? Everybody tracking? Get it? Got it? Good. Now, get on off my screen. Okie doke. Does anybody have anything for me? Before we get into it, do we have it? Hold on before we get into it. I seen Yolanda popped in. Yolanda, what's going on with my little buddy? Where's my little buddy? Carter.
Everybody out at soccer. So.
Oh, everybody at soccer.
Yeah, well, Chloe is and the other 2 waiting for their turn. Campbell, take that seat, baby. That's the win. Sorry, guys. How everybody doing?
Everybody good. Wait a minute. Which one my buddy? Is it Campbell or Carter?
That's Campbell.
Say again?
That's Campbell that you talk to sometimes, and Chloe is the one who drew the picture.
Okay. Campbell and Chloe drew the picture. Yeah. And then the boy, that's Carter, right?
That's Carter, yeah.
Yeah, that's what I said, my little buddy.
Oh yeah. Oh my. Yeah. He don't talk as much as them.
That's why I said where my buddy at.
Oh, he waiting for his soccer practice to start.
Yeah. All right. The rest of them ain't gonna be my little buddy. Them, you know what I'm saying? Them, you know, them the little, you can't call a little girl my little buddy. That ain't. What would you even call a little girl? I don't even know. I don't know what you call them.
My little yappers.
My little nieces. Where my little nieces at? That's good. There you go. Anyway, stop disturbing me, Yolanda. Does anybody have anything for me? Did Price do something that caught you off guard? And you was like, whoa, 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 why did it do that? Did price do anything that you, you was expecting this, but it did something else? Anybody have any questions they'd like to take a deep dive into? What's up, Miss V? Anybody got any questions they want to take a deep dive into? All right. I'll take the silence as no. Okay. Before we get started, right? Somebody tell me, what did price do today in front of FOMC Fed rate announcement? In front of the Fed rate announcement, what did the algo do with price? What did it do? What did price do today during the from the open last night at 6, and especially during the New York session? What did price do today? Who has a clue of what price did today? Consolidate, that's part of it. There you go, Empire Trades. Shout out Empire Trades for pulling up with the hard hitting answer. You feel me? Price made its way back to equilibrium and just hung out around equilibrium for the rest of the day. It made its way back, especially during the 9:30 open. At the 9:30 open, price made a beeline. Made a beeline to equilibrium and then just hung out there for the rest of the day. Beeline. Y'all don't believe me? Let's go look at it. Remember, right? Remember, we said that on the monthly chart, right? This was the lowest low. This was the highest high, right? We was watching everything on the. Who remember this now? If I'm swelling, say, Tim, you swelling, right? Who remember this now? We talked about on the monthly chart, right? We had come back to a discount. We had reached some anticipatory reactionary points in the form of a bullish fair value gap and a bullish order block. And we said those were the PD arrays that were in the discount. Those were the only monthly discount PD arrays that price needed to come down to, right? And we were there. We're at our anticipatory reactionary point, right? And then those were just below equilibrium, right? So this is the lowest low. This is the highest high. 50% of that range right there is equilibrium, right? Price came back down to equilibrium. So see, this right here is the equilibrium, that black line there, right? And if we go back down to that 15-minute chart, right, this right here is the 9:30 candle. That's the 9:30 open, right? Right there, 9:30 open, right? This is the equilibrium line right there. That's yesterday's low. The thick black line is yesterday's low. That thin black line that you probably can't hardly see right there, that's equilibrium, right, of the range. Matter of fact, let me put another line there just in case you can't hardly see that. Right. Let me put another line there in case you can't hardly see that. That Fibonacci line. Well, matter of fact, I ain't even got to put another line there. I can just come in here and do this, style, and thicken it up. There you go. I'll thicken it up like that. And then, matter of fact, I'll make it a dash. I'll thicken it up and make it a dash so we can tell the difference between the two. Okay? Now, when I go back now, can y'all see that line better now? Is that better? Can you see that line better? If you see that line better, put a 1 in the chat for me. Or say yes, whatever. Can y'all see that line better? Okay, it looked like you can see it better than me. So, all right. All right, thank you, Here to Learn and Share, for putting the 1 in the chat. All right. So, 9:30 candle. Look at this right here. Look what price did. Beeline. Remember I said beeline. Made a beeline back to equilibrium. Right? We closed over here. We closed over here yesterday, right there. I mean, yeah, we closed right there, and we opened here at 6 o'clock. So that's the open. That's the open. That's the close. There's our new day opening gap for today, right? Throughout the night, we melted down, right? When it got there to midnight, we went back up to where? The new day opening gap, right? Traded down here to that daily SIBI that we had created. Inversion fair value gap came right down to consequent encroachment, hung out there at consequent encroachment a little bit after midnight. As you see, we dropped down below the low, took out the low, then made our way back up to the new day opening gap, right? Went back to the new day opening gap, wicked into it a couple times. Then we dropped back down again below midnight, down to consequent encroachment again, right? Hung out there for a while, right? Just hung out there on top of that consequent encroachment, just engineering liquidity there for a while. And then as we got ready to go into the New York session, started to break down. And at 9:30, straight down to equilibrium, right? Came down to a new day opening gap from the 11th, right? Hung out there for a little while, wicked down to a new day opening gap from the 12th. Just hung out there between consequent encroachment of that new day opening gap. Look at that. Look at it. Every candle, every single candle is just riding along consequent encroachment of that new day opening gap and bouncing back and forth between equilibrium and consequent encroachment of that new day opening gap for the rest of the day, right? And that was from 10:15 all the way over until 5 o'clock. From 10:15 to 5 o'clock, just hung out right there at equilibrium. So what do we say? What do we always say? Is it going to be like this 100% of the time? No. But what do we always say going in front of any kind of big news? We say price will seek what? An area of what? We say that price is going to seek an area of what in front of big news? The majority of the time, price will seek an area of fair value. Very good. Shout out here to Learn and Share. Empire Trades got half of it. Right? Shout out Marco. I'm assuming that EA mean equilibrium. You trying to type shorthand to get your answer in there fast. Don't feel bad, Marco. You know what I'm saying? I'm an old guy too. I type slow too. You know what I'm saying? You're going to get it together in a minute, Marco. You keep on trying. Try it again, Marco. Try it again. So, right, going in front of big news, right, the market don't want to be offside. The market don't, and what I mean by offside, it really don't want to be net long. It really don't want to be net short. It don't want to be, you know what I'm saying? They want to have it at an area of fair value so that when the news drops, it can go either way. You know what I'm saying? It can go either way. So the vast majority of the time in front of big news, the market will tend to seek an area of fair value, right? And that's exactly what we did today, right? And as we see in the case of like today, after I didn't get an opportunity to participate in this drop right here because it didn't give me a setup. It just at 9:30 it opened and it just dropped. It just dropped. It didn't give me a setup. This is a 15-minute candle. It moved all the way back to equilibrium on one 15-minute candle, right? 5-minute candle. It was 3 5-minute candles, right? So it ain't giving me no type of retracement opportunity. Okay, looking at the 1-minute time frame. See, looking at the 1-minute time frame, come over here, right? It ain't give me nothing. The only retracement that it gave was here, right here. But this right here is way too deep, and like I need for it to show me that it want to keep going down when we get all the way down here this far, right? This is way too deep for me to be trying to trade down here. because we started up there, right? If you don't trade right around the open and caught this short right here on the 1 minute, right? For me, it was nothing. It was nothing to take, right? Right. This right here, that it wasn't enough for me to trade here on the 1 minute. I didn't look sub 1 minute to see if anything was in here, right? But wasn't nothing for me to trade, right? Wasn't nothing for me to trade over here because when we traded back up into this volume imbalance, you know, we closed above it, then we came up and we continued to close up. I'm like, okay, if we take out this high and then pull back down, I'll look for something. Or if we take out this high and push through, I'll try to trade back into the range a little bit. That's what I was thinking there, but we never took the high. We hit the rejection block and dropped again, right? I don't trade off rejection blocks, but we hit the rejection block and we dropped again, right? And so when we got this retracement there, right back to the equilibrium. I didn't have this equilibrium on my chart this morning, but we traded back up into that low, right? I wasn't trying to take nothing here, right? I needed to just show me what it wanted to do, right? So I shared with the community today that I took 3 trades today, right? My very first trade was a loss, right? My very first trade was a loss. Got slapped all about the neck and shoulders immediately. Get out of here, boy. Immediately. Golly, knocked me out, right? Took a second trade. Beautiful delivery. Right? Beautiful delivery. Boom. Right? Put me back in the green on that account. Right? Back in the green and exceeded my my okay, I'm cool with that target. Right? Put me back in the green and exceeded my okay, I'm cool with that target. Right? And then took another one. Boom. Right? And target hit again, right? But where did I take it at? Inside this chop of the slot, right? After that first loss, I said, okay, now I see what's going on, right? We finna start engineering liquidity, right? So I just played the range, right? I saw it once I got my head bust in, immediately I said, okay, we just finna engineer some liquidity. So I just played the range, right? Why did I choose to play the range, right? Because yesterday, the morning sucked, and then the afternoon was beautiful, right? Today, right, the morning just had one fell swoop, right? You know what I call this right here? That one fell swoop, especially going in front of high news like FOMC. You know what I call this right here? I call that the bait. All right, Michelle, Taco. What's going on, Michelle? Who can tell me? Who can explain? Who want to take a stab at why I call that the bait? Why do you think I call that the bait? Huh? Why do you think I call that the bait? Let me try to do this right here. Since this right here is showing backwards. Why do y'all think I call that the bait? Nobody want to take a stab at it? Ouch! 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 Day prior to FOMC can anticipate choppy PA. Yes, that's part of it. That's a big part of it, right? Well, why do you think I call it the bait? Gamblers, traders, guessing.
Because it's relatively equal highs in. You can guess to go either way, I guess.
Right? It ain't even much that deep, right? It ain't even much that deep. The reason why I call that the bait is because what happens, right? It made a move, then moved to the right, right? Before it even started moving to the right, this is the bait right here, right? before it started doing this right here. This is the bait right here, because how does Michael teach you to trade his concepts, right? Michael teaches you to trade the ICT concepts by letting the market make a move and then waiting for the retracement to participate while you're in the premium or the discount, right? Retail-minded traders are taught, right? Let the market maker move. Let the market make a move and then catch it as it's breaking out and ride it down, right? Or, you know what I'm saying? Let it make a move and then try to catch it, like even with breakout traders, right? They want to see it break out and they catch it once it break out here, right? They want to sell weakness. Soon as it break out to the bottom side, they sell it once it break out, right? Soon as, like, if it's making a pattern, if it's forming some type of pattern that they, you know, draw this right here, and when it breaks out, they sell on the breakout here. Like once it come out and touch that right there, they're set. Once it break out of the pattern, so they're teaching. Once it breaks out, it's going to continue going, right? So when it drops really fast like this right here, right? When it drops really fast, that's the bait to get people to chase it short. Now everyone is chasing it short, right? Oh, we about to go. Everybody is chasing it short, right? But when you anticipate, when you anticipate choppy price action because it's the day before FOMC, based off of your prior knowledge of trading in front of FOMC, you're anticipating this to not be such a good day. We spoke about this yesterday. We said tomorrow can be suspect because we're getting ready for FOMC on Wednesday, right? Not saying that it has to be, but tomorrow will probably be suspect. We spoke about this yesterday. So if you're anticipating the day to be suspect, right? When you see the bait, right? You're not going to go chomp on it, right? You're not going to try to keep forcing long moves down, right? If you decide to engage, right? Now you know how to, you know how to watch price and let it and play within the range, right? You know how to watch price and play within the range. Okay? But Tim, you said you got busted. I did. I got busted in the head on my first trade, right? How did I get busted in the head, right? When price came here, right? We set relative equal lows, right? And then we start to push up there and we started hanging out here, right? So my trade idea was, if we pull back into this new day opening gap, right? Since it's like we not it's like we hanging here, but we're not trying to drop down. I'm gonna trade it back up to this high up here, right? I'm gonna trade it back up to this high, right? So when we came down here, right? When we came down here, I missed it, right? I missed it. And then when it went up and it created this fair value gap there, as it came back, I went in for the fair value gap there, right? I didn't want to give it a lot of room. I didn't come back to the low. I didn't come back to the swing low, right? I just gave it back to, right? I said if it trade outside of the fair value gap, I just want to get out because we may chop longer than I want to, right? Soon as I got in, boop, took me straight out. Then it went up, took out my target, right? No harm, no foul. Took me out, right? Sat there and waited. Now I'm anticipating price to range. I'm not trying to force anything, right? So now once we took out my target there and we dropped down and we took out the sell side right there, right? Who can tell me what I'm looking at this as, right? Who can tell me what I'm looking at this as right here? Who can tell me? And why? Judas swing. Very good. Judas swing. Right there. Right? I'm looking at that as a Judas swing. And since I'm looking at that as a Judas swing, right? And we have created, right, imbalance here. Now, since I got my head bust in over here, right? What am I doing? What am I doing over here when we come here? Who can tell me? Who, y'all know how I trade already. Gang, gang, y'all know how I trade, right? Y'all know how I trade, gang, gang. Looking at what's going on with the chart, right? Looking at what's going on with the chart. I got my head bust over here, right? I got my head bust right here, all right? Now we get this move here, right? I'm looking at this as a Judas swing. Whoever don't understand why it's a Judas swing, right? Because we came up into the buy side, then we immediately reversed and took out the sell side right there. Judas swing, pop, pound, right? Now that we got a Judas swing and we have this imbalance right here, right? When we trade up into this imbalance over there, what am I, yeah, I'm looking for the short. I'm looking for the short, but what am I doing over here? What am I going to do over here first? I'm looking for the short. Right. I'm looking for the short because it just gave me a signature that it wants to go short. But once I get over here, what am I doing over here? Who can tell me? Am I jumping in right here? Right there? Am I jumping in right there as soon as it hits this fair value gap right there?
Are you waiting for more confirmation?
Waiting for more confirmation. Right. Shout out Jim. I'm waiting for more confirmation. All right. No. Shout out here to Learn and Share. No, I'm not jumping in right here. Right. Why am I not jumping in right there? Because I just got my head bust right over here. I'm down. I'm down. So I want a little more confirmation before I pull the trigger again. Right. I'm down. Okay. So looking at what price got's going on. Right. Who can tell me? Who can tell me where my confirmation entry was at and why? You got a big clue. I already put a big clue on the screen for you. Who can tell me what my confirmation entry was and why? Any takers?
Would it be the macro time and the order block?
Macro time, very good, very good. This is the macro window here, all right? This is the macro window here. So we coming into the macro time, right? All right, we came into the macro time here, traded into the imbalance, right? Then we pulled back down into the order block there, right? Creating the inversion fair value gap there. But as soon as we did that, we traded back up, right? And repriced in this little SIBI right there. So I still don't have anything concrete yet, right? Still don't have anything concrete yet. And that was off of an expansion candle there. So this order block right here, this order block right here is doing its job. So when we come here, boom, right? We trade into the order block and we come back up like that. Then this next candle, what happens here, right? We trade up, trade above that high and reject off of it, right? Trade up above that high and reject off of it right there. Once we reject off of it, then we come back down and come all the way down to the lower end of the order block that we just traded into, right? What do we say when we trade into any PD array, right? If it's exceedingly bullish, we want to see it, touch it, and get gone, right? But if we start to see it dig through it, that's showing a sign of weakness, right? That's showing a sign of weakness. So when we dig through it like that right there and create this imbalance over here, okay, when price comes back in to this imbalance right here it comes back into this imbalance here. Now, mind you, right, I already got my head split open to the white meat, right? I already got my head split open to the white meat. So I'm watching this area on a sub 1 minute chart also, right? And on the sub 1 minute chart, right, I see that here, before dropping here, like before dropping down there like this, we created an immediate rebalance there, right? So on this sub 1 minute chart, now I'm looking for my entry up here in this big volume imbalance there, right? Because on the sub 1 minute charts, what I would do, especially in like high resistance conditions, right? I wait until we get to the highest or lowest imbalance before I start looking for an entry, right? On the sub 1 minute charts, if we're in high resistance, right? I'll wait for it to get as far north or south as we can before looking for an entry. So based off the 1 minute area, right, I was looking at the upper part of that because there's this huge, it's actually a liquidity void / volume imbalance right up in there, right? So that's why I was looking for that area, because if you notice right here, these candles don't touch at all. So that's like a liquidity void there. So that's why I'm looking for an entry up here, right, instead of down here somewhere, right? And then I'm only targeting low-hanging fruit, right? I'm targeting low-hanging fruit. I'm not, you know what I'm saying, looking for the gusto. Low-hanging fruit, and then there's the low right there, right? So if I get low-hanging fruit, I'm good. If I can get the gusto, I'm good. But that's all I need, right? That's all I need, right? And so it's just about sticking to your plan, right? Understanding what price is trying to do, right? And then executing when the algorithm gives you an opportunity to do so, right? And then once we did that there, I came right back in another account and got long here back to that high right there, right? I think that's the spot where I did it at, right? Got long there back to that high right there, if I am mistaken. I think that was it. On the last one. Hold on for a second. Let me see. Yes, that's it right there. Yeah. There, back to the high right here. Right back to that high. Why? Why was I looking for that move right there? Because we had come down, taken out the sell side, right? Traded into this new day opening gap, right? This is all still during the macro time. So during the macro, right, we have come down, we have spooled into the sell side liquidity. Okay, we've spooled into the sell side liquidity. Now that we've spooled into the sell side liquidity, right, we've dropped below the low, and then immediately came back, right, and gave us a change in the state of delivery, right? Immediately. Again, we talked about this before. We spoke about this before where we say, hey, just because this is an engulfing candle doesn't mean that this is a change in the state of delivery or order block. That engulfing candle does not exist in ICT concepts, right? Because we came down and swept liquidity, okay, and then we started to consolidate here, engineering liquidity, and then we attack the sell side and then immediately attack the buy side. That is a Judas swing. Just same thing we looked at over there, right? We took out the buy side and then came lower. It's the exact same thing. We attacked the sell side. That's a Judas swing. So since that's a Judas swing, now you're looking for this to be your change in the state of delivery and for this to act as a bullish order block, right? What happens, right? We create another down close candle. We trade into the bullish order block and then we displace away. There's your order block right there. Order block / propulsion block. Why? Because it traded down into this order block and then we got gone, right? There's your propulsion block right there. So now that's our propulsion block, right? We trade away, okay? Once we trade away there, then we create a BISI here, right? We create a BISI there, right? There's the BISI, right? Price trades right? Price trades up, hits the BISI there, then price trades up and it comes back down, right? Tim, why didn't you take this BISI right here? I didn't take that BISI right there, right? Because we have this huge inversion fair value gap down here that we never touched there, right? We didn't touch it. So I'm looking for price to possibly want to trade all the way back down there, right? I'm looking for price to possibly want to trade all the way back down there. So once we came back down to this area right here, right? Once we came back down to this area right here, and then we started to go back up there, right? We started to go back up here, right? Now, boom, that right there let me know, okay, we're respecting that area. Right? We're respecting that area there. Okay, let me go. Get back there. This is where we hit there. Right, we came down here, then pushed back up right there. Right. Now, and on this level right here, once we push back up there, now we have that down close candle right there. That right there is what I traded off of, right? Aiming back there to the low hanging fruit, right? The extra confirmation, right? The extra confirmation. And why was I looking for that extra confirmation over here? Because it's been high resistance and we had this huge inversion fair value gap that we never traded back into over here, right? We never traded back into that huge inversion fair value gap, right? And we were just hanging out here doing, right? So right there, the extra confirmation there, boom, got it. And it still went deeper than I wanted it to go, right? Still went deeper than I wanted to go. We had this inversion fair value gap right here compiled with that order block there, right? And we traded all the way down to that order block there, right? I could sit here and lie, be like, oh yeah, I traded off this order block. No, I didn't. I saw that order block, right? But I wasn't trying to force that order block because we had already traded down into this higher time frame PD array and then came back up and created this inversion fair value gap on the 32nd. So I was just trying to trade off of this order block here, and it still retraced a whole lot farther than I wanted it to because it came back down into that order block right there. All right, and that's just looking at how price. This is what I be talking about when I say understanding what price is interacting with, right? Understanding what price is interacting with, because we see here on, God dog it, we see here on the 1 minute time frame right there, we see that we have a bullish fair value gap resting right there, right? So we're just going to make this, I'll do it like this. All right, we got a bullish fair value gap resting right here, okay? Bullish fair value gap on the 1 minute, right? Now, as price trades back down here, right? As price is trading back down here, it comes there, and what is it doing? It is coming down and reclaiming this bullish fair value gap. Tim, why do you say that? Because we traded into it here, right? We repriced half of it, right? We repriced all the way to the low of it. Okay, came back, we went up, and then we came back down to it again, right? So now we're coming down and reclaiming the fair value gap here, right? So put a line right there. Now we're going to go to the 30-second chart. On the 30-second chart, right? On the 30-second chart, we have a bullish order block right here, right? So we mark out the bullish order block on the 30-second chart. Here, right? We got a bullish order block right here. Order block, bullish. That's good enough right there, right? We got a bullish order block right there. Now, you say, Tim, we traded down into the order block there. Nepa. We traded down into the 1 minute BISI. Right there, traded down into the BISI, reclaiming the BISI, right? And then we left after reclaiming the BISI. Then we came back down, right? We came back down into this last down close candle right there on the 30-second chart. This right now that we're going back up, trading above that, that's making this giving this the potential to be a bullish order block, right? So we trade back into this potential bullish order block, but where do we stop? At the actual order block we've already confirmed, right? So we trade back down into the order block, stop immediately, flat, no wick or nothing, open up the next candle and get up out of there, right? That order block is done its job, right? Came in there, that order block done its job with precision. Okay, so when we came down, we reclaimed the fair value gap, right? And then we went back up, we came down into the order block, right? Just looking at it from a time frame perspective, right? Understanding why is price revisiting this area? Why is price coming back down here, right? What is price respecting? What PD arrays is it respecting, right? And when you're watching price in real time, these are the little signatures that you just look at, right? Some people, you don't have to get as nuanced as this, right? You don't have to get this nuance when you're watching price. Me, the way my brain activity works, I have to get this nuanced. I have to look at it to the nth degree, right? I have to understand what price is doing at every single second, so that I can make the decisions of how do I want to engage, right? How do I want to engage? Okay. I took 2 trades that was basically the same. One I got busted in the head, and one was good. And then the next trade, I took it, you know what I'm saying, a total different way, a total different setup. But it was all the same concept, right? Based off of the 2 that was successful, both was based off of some form of a Judas swing with a later confirmation of an entry, right? But it was taken based off of total different PD array / entry ideas. And why am I able to do that? Because I need to understand what price is doing all the time, so I can you know what I'm saying, I can trade from instead of having like a mechanical setup, I can trade in a discretionary manner, right? I can trade what I see. I can trade what's in front of me. I don't have to wait for a particular setup because that's not helpful for my trader identity. That's going to force me. That's going to make me try to force trades. If I don't see my setup, I'm going to just start making my setup up. Right? Like y'all see, if we let the we saw this yesterday. If we let the algorithm show us the potential breaker, most of the time, if the narrative has not changed, it's going to come back and use that breaker. If we look for the algorithmic signatures, and we saw that play out yesterday from something that we saw Thursday, based off of anticipating this to be a breaker, so we're taking longs down here back to the breaker where when it creates the breaker, right? We talked about that, talked about the trades, entries, and all that right there, and then we saw that Sunday we traded back down. Monday we traded back down into that breaker to continue higher, right? If you let the algorithm show you the signatures, then you see the ICT order block, the ICT breaker, the ICT inversion fair value gap. Then you start to see these things instead of just guessing, oh, we traded back above this fair value gap, now that's an inversion fair value gap. No. What part of the narrative warrants that to be an inversion fair value gap? What part of the narrative warrants that to be a breaker? What part of the narrative warrants that to be a BISI or a SIBI? All right? Y'all tracking? Everybody get it? Everybody understand? We all on the same sheet of music. That's all I got, man. Who got something for me? Who got something for me? That's all I got. I ain't got nothing else. It's 6:56.
My Ninja Trader told me that it's getting close to time to roll over contracts. Are you getting close to doing that?
Mine rolled. Mine rolled yesterday. I didn't change it on TradingView because I got Ninja Trader set to like roll automatically. And so when I logged in yesterday, it said, hey, these contracts from the roll. And I was like, okay, yeah. But if you want to do it based off of volume, right, there's two places you can go. You can go to either CME Group, right? Go to CME Group and go to Markets, right? And then pick out your market that you're looking at. There's the NQ right over there, right? And then look at volume and open interest. And then we see here, right now, right, the total volume on March is still a little bit higher than the June, right? Since it's this close right there, you know what I'm saying? I say, hey, you can go ahead and roll it now if you want to, you know, because this is from it hasn't updated just yet. This is from like without today's trading, because these are the same numbers from this morning, right? And then you can go to barchart.com, right? And then put in your ticker symbol, right, that you want to look at. Or just go to your ticker symbol and then go down here where it says all futures prices, right? And then you look at the March contract, right? We got over here, we got the volume is yes, the volume there on the March contract is just say 3,500, and the open interest is 152,000, and then the volume is 4,600. So you got more volume on the June contract now. So this one here, you know what I'm saying, you got more volume moving into the June contract. So now with this one here, okay, it'll be, you say, okay, it's time to roll over to the June contract now, because we got more volume over there on the NQ. It's like the volume has picked up higher, right? So right now, it's more volume on June contract. So you say, okay, so you can pick whichever site you want to go to, right? And see which one, you know what I'm saying, it's going to give you because over here, this is, don't ask me why these numbers be like, why these numbers are like so different. I don't know what all they adding in this volume number like that, because when we look at over here, it say like open interest is 150,000 contracts and 140,000 contracts, you know what I'm saying, give or take, you know. But then when you look over here, right, say total volume is 500,000. So I don't know if they're counting like the opens and closes, you know what I'm saying, like, cause this right here is just the contracts that are still open, right? This is still the open interest. This is still what's outstanding and open, right? But over here, it's like got all these numbers. So is it counting what's open, what's closed, what's, you know what I'm saying, all in this number right here, because it's a total volume right there. And then this is what the open interest was at the close over here. All right, so you had 152,000, 143,000 at the close over there, and that's the same that it is there, right? Those numbers still the same, but these numbers right here, those numbers there, that's what it was this morning, because I remember the 584 and the 508, right? I remember that right there. Those numbers didn't change, but at the close, right, those numbers there are the same as what's over here. And maybe all of this hasn't updated to show today's information yet. I don't know. But those are two sites you can go to and look at to see which one has the most volume. And then you can change it once the more volume is on the front month. Then you can roll over to the new contract, right, when the volume is on the front month. So since the volume on bar chart, this is the one I typically go to do it. The what's the name? I come here because it's like it's easier for me to get to it. It's simpler, right? It's simpler to get to it on here. In my mind, I just click markets, NQ, right? Volume, open interest. It's like I'm just clicking my finger, but on here, I got to come here, I got to type it in, then I got to go down, click this, then I got to go, you know, it's just, I don't know, for me, it's just, you know, it's just simple. Like now, like over here, I can just go there, I can, you know, click the link, right, click my shortcut, right, click market, click, I'm just clicking, right, click. Whereas over here, I got to come in here to it. Then I got to stop. You know what I'm saying? I got to stop and type. Right? Then once I stop and type, then now I can go down and go to all futures. Right? And got to worry about the ads. It's just having to take my hand off the mouse and type into it. You know what I'm saying? It just makes it simpler on the other one. But yeah, that's neither here nor there. Y'all ain't asked for all of that.
Yeah, I just switched my trading view at the end of today. I have noticed around contract rollover time that you start getting more volume and balances and gaps as the volume starts dying down in the one contract.
Yes. And that and that's because positions have to close and have to open. So it's like you get in large amounts of positions closing and opening at the same time, so that's going to create those sudden moves in these directions. You know what I'm saying? So just think about if you close a bunch of contracts at one time, it's going to suck a lot of liquidity out of the market. You see what I'm saying? And if you open a bunch of them at one time, it's going to push a lot of liquidity into the market. So it's going to create those gaps in them volume imbalances. And because the price, it's like when you're opening them up, it's like when you're doing you can't do but so many contracts on this price, right? So it's going to be like bye. You know what I'm saying? Like price is just moving away, and as the time is going by, this candle might close here, but it's going so fast, this next candle might open there. You see what I'm saying? So it's gonna be creating those imbalances and stuff like that. That's just, that's the way little Timmy Rogers' mind make sense, right? Just some more of that stuff where hey, we're coming up on, what I'm saying, contract rollover. We're coming up on FOMC. We're coming those economic calendar type things that you want to be aware of that can affect your intraday trading decisions. Boy, Empire Trades, you better stop that. Empire Trades, you're funny. You're funny. Do anybody else got anything for me? Do anybody else got anything for me? Nobody got anything for me? All right, man. That's it. That's all I got. I appreciate y'all for hanging out with me, man. Y'all make sure y'all, but this right here ain't got hardly nothing on this. Ain't hardly no candles on here. They ain't got no candles on here. December still. And then look at that. The candle's even different on it. Look at this one here. The December candle is the lower candle here, right? 2023. But on the new contract, the January candle 2024 is the lower candle, is the lowest candle. All right. And then looking at the new contract, we didn't even have enough information inside the order block to even get there. Right? See there? With the order block there. When we kiss the order block here, right? It's a matter of fact, it's not even a wick on the new. See, the new contract don't even have a wick there. Right? We do have the fair value gap. Right? We do have the fair value gap that we traded into. Right? Our fair value gap. We do have that. Right? But we don't have the wick on the order block. Right? And then this over here is different too. Remember, we had a red candle over here. I think we did. Yes, we did. So we had a red candle there and then two red candles. So July, August, and October were red candles there. And here it's July is the only red candle there on this contract right here. Because like I say, even way back when, stuff was happening inside this contract for people who had like plenty money. Way back when, this stuff be happening inside this contract. Right? But until like now it's getting ready to be the front contract where everybody is doing the trading in it. So I'm gonna let y'all go. I'm just gonna update my chart. Just gonna update my chart. And then eat some leftover eat my, I ain't gonna say leftover, but my take home from Olive Garden earlier today. Eat that. But tomorrow is Wednesday, so diamond group, diamond tier. Right. The diamond tier, we will be doing tape reading in the morning. We will be doing tape reading in the morning on the diamond tier. Man, look how small the order block is on this one here. Look how teeny the order block is on this one here, on this month. On this contract. Teeny tiny order block. We will be doing tape reading at 9 o'clock. Tomorrow is Wednesday. That's for the diamond tier. Speaking of the diamond tier, if y'all have any lecture ideas for the monthly lectures, drop it in the lecture idea channel, lecture suggestion channel. Because I can sit up here and make up stuff all day long, but who is it really helping if it's not something that you directly need? Right, so down here on lecture suggestions, y'all got all kind of stuff in here. How I missed all of this? Oh no, I did look at. I think I did look at. Yeah, I did look at this. I remember when I was like, he cheating. Talk about I agree with her. Yeah. So drop the suggestions in here, right, for the lecture suggestions. Right. Our next one is gonna be talk about dealing ranges. Right. Dealing range, price legs, dealing ranges. Right. For using it for how do you utilize them for your trade setups, like the dealing ranges. I'm just gonna be talking about dealing ranges and price legs and stuff like that. That's gonna be the next one, which will be what's that? April the 2nd. Yeah, April the 2nd. Yes. So. Dope. So with that, I'm gonna bid you a deal. See how spotty price is over here on the daily, right? See how spotty price is there. Don't even have that daily fair value gap to mark out the one that we had on the other contract, right? We don't even have that daily fair value gap to mark out over here, right? Don't even have nothing to look back that far on the front month, right? Which is cool. You don't need that older stuff, right? We're creating structure, right? We're creating structure, right? I remember before what we said. We created a low, we created a high, right? Now we've engaged that high, right? We've traded back into the range. We've come back into the range. We're back at equilibrium again, like we said. But if we look here, right? We've also respected the mean threshold of that daily order block there. Right? The daily order block, even if we look at it on the basis of the body alone, right? We've respected the mean threshold of that daily order block right there that we created once we pushed up, engaging that buy side. So we're creating new structure here. We're forming new structure. There's not necessary for you to look all the way back here to look for structure, for price, to look for signatures and price. Right. Current structure is you know what I'm saying, like all you really need. You don't need to go way back here 2-3 years ago, you know what I'm saying, to look for structure. Right? Current structure is all you need. If there's looking back 60 days for liquidity and imbalances anyway, right? It's looking back 60 days for liquidity and balance. Higher time frame trading and entry method. H4, get out of here. I told y'all ain't gonna be trying to get me to make no models for y'all. Everybody want to know a entry method. Get out of here. All right, man. That's it. That's all I'm gonna put on there. That's all I'm gonna put on there for now. And it's crazy how all these things are landing like right on these candles. Like no matter how low I go, it's like right on the right candle. Even there. Like everything is right on the, that one is awful just a little bit. I don't know, man, how is this possible? How is just everything ending up just on the right candle? This one, this isn't. Right now, see, this isn't on the right candle. This makes sense here now. Right, but all these lines, these highs and lows, right, I'm all the way down to a 1 hour chart, and it's still being dead on the right candle. Okay, this one here, the weekly low, that's a little off on that 5-minute candle. All right. There you go. New contract, everything on there. Oh. See. It's a teeny, these gaps getting teeny, tiny. Little small. The ones you don't be, you be like, man, I don't need to put this on my chart. That's how I be feeling sometimes. Hey, man, little old gap. I don't need to put that mess on my chart. All right, that's that. The week. Okay, so that's Monday. Tuesday was up here somewhere. And Wednesday down here. All right, man. I'll see y'all in the morning for the tape reading for the Diamond Crew. Everybody else, I'll see y'all tomorrow night for the price action recap. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't hablo español. Y'all be safe out here in these trading streets, man. Gone.